Hi, this is Joe Kehrig, managing broker of Coldwell Banker Real Estate in Danville, and this is your San Ramon Valley neighborhood update for the week of October 18th. So if you've been watching and you've been seeing that the market started cooling a little bit in August and September. Now, when I say cooling, prices haven't gone down at all. But what we've seen is instead of getting 5, 10, 15, 20 offers, we're getting 2 or 3 offers. And so the more offers you have, the higher the price is pushed up. So if you get 10 offers, $1.5 million home is probably going to go for $200,000 to $300,000 over asking. And if you get 2 offers, it might go for $25,000 or so, the $50,000 over asking. So we have seen and you'll see later on when you look at the graphs, we have seen obviously a pullback a little bit from the appreciation. But prices have not gone down because it is still, as long as we'll be looking at it, in the next 18 months or so, it's still going to be a seller's market because there's a couple different factors. One is purely supply and demand. And, we're seeing so much inflation, which is another big reason out there. We're seeing so much inflation. Well, housing is no different. I mean, you see inflation going up. Gas has gone up 30 or 40%. Lumber's gone up a couple 100%. Metals have gone up. Everything has gone up. So why not houses? Matter of fact, that's why you see the hedge funds now purchasing, again, putting billions and billions of dollars back in the real estate market, buying literally hundreds of new homes even before they're out of the ground, because there's no end in sight on the inflation. As long as you have the government, they keep printing money, then the money becomes, the more money out there, the more the debt is, then obviously the less that the money is worth, hence, the inflation kicks in. And so, but what we've seen the last couple of weeks has been interesting. We've actually seen a little resurgence, a little push in the market. And I think that's because the people that haven't gotten into the market or wanted to make their move see the interest rates going up. And it's been reported across the board that interest rates will definitely go up. The government has already started tapering a little back, which obviously, the less they buy, it raises the 10-year Treasury rate. And the interest rates follow the 10-year Treasury rate. Matter of fact, that's, when you see the Treasury rates go up, you can almost guarantee that the interest rates are going to go up. Matter of fact, look at this first graph. For almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. Look at this from 1972 all the way, through 2020. Then when you look at 2021, you can see the same thing. The Treasury rate, has gone up and down a little bit, and obviously the mortgage rates have followed. But then look at just the last couple of months in September, you've seen the Treasury rate go up, and obviously the mortgage rates have gone up also. Look for that to continue as the government starts tapering on the mortgage-backed securities that they're buying. So that definitely might, will impact the market. We just don't know how much it will impact the market, because right now it's actually, increasing the activity in the market because people are trying to get in before interest rates go up. Now, once interest rates go up, then the idea behind it might pull the market back a little bit. But when you really look at it, the latest statistic is the fact that we are 7 million homes short than what we need. That's the latest statistic. And a couple months ago, I was telling you 4 million is what we're hearing. Now we're hearing 7 million because there's so much demand for housing, both institutional-wise and obviously consumer-wise. The millennials are buying. And because the builders literally have, cut by about $500,000 a year the number of homes that they've been building the last 14 years after the recession, 5.6 million homes haven't been built that would have normally been built during an average year over the last 14 years. You add that in the fact, and you look at the inflation, where, let's face it, real estate is the best hedge against inflation. Inflation goes up, and real estate will go up as a hard asset. So you see there's no end in sight as far as the prices staying strong from that standpoint. And from a pure supply and demand, you obviously have the millennials in the peak of their buying season. There's just not enough homes out there. And the builders are really having a hard time to keep up with supply chain, the cost of lumber. A lot of builders I know won't even put a home on the market until it's actually done because they have no idea what it's going to cost them. And a lot of builders got really hurt when literally it cost $50,000 to $100,000 more to build a home and they sold it a year ago. And builders, yeah, they make some profit, but it basically for a lot of builders just ate up their profit. So what's going on with the market now? Well, let's look at the graphs. It's the same type of thing. It's, every week we have some cities that kind of go up, some cities that kind of go down as far as the new active listings compared to the pending. So there's no clear-cut case where we see everything. It's just kind of switching in and out. And you can see San Ramon. San Ramon, the active properties have gone down a little bit, and the pending properties have gone down a little bit. But as I've always talked about, when you look at the graphs and you have that many more pending properties than active properties, matter of fact, if even the active properties were even with the pending properties, it would still be a really strong seller's market. So what do you call this? A real strong seller's market. So when you look at the Danville market, pretty steady, again, but pending properties have gone up a little bit, active properties have gone down, which is not a good sign. We obviously, if you're a buyer, you want to see it kind of go the other way. Blackhawk, a little bit of change, but again, one thing to remember about Blackhawk, we're not talking about 30, 40, 50 sales or active listings or pendings, like in Danville and San Ramon where we have 100, pending properties. We're talking about 12 or 15. So even though the graph might look really out of whack, like the pendings went way down, the actives went up, you're only talking about a couple properties. The biggest thing is here when you look at Blackhawk, and there's only 11 active listings in Blackhawk. And again, going back 30 plus years when I started selling in Blackhawk, during the recession, we had 200 homes on the market in Blackhawk, basically 1 out of every 10 homes. There was about 2,000 homes in Blackhawk. And we would consider it a seller's market when we had less than 50 homes on the market. Well, now we have 11. Alamo, you've seen a little pullback from Alamo. Activity's gone up a little bit, active property's gone up, pendings have gone down a little bit, but not huge. There's no trend setting in any of these graphs. Dublin, same type of thing. Actives have gone up a little bit, pendings have gone down, but not by a huge amount. But when you look at the percentages, the one thing that we talked about and we'll see what happens in the next couple of weeks, where we're not getting the offers. If you guys go back to where we were a couple weeks ago, really a couple months ago or 6 weeks ago, every number that you would see on this chart over the last 3 weeks would be like have a 1-1. It would be 112%, 115%. We got up to 116%. So every single time the homes that we're closing for 10% over asking, and you sit there and go, oh my God, how long can that go on? Well, look at this chart. Literally, you have 15 stats on that chart, and all but one is a 1-0. So you definitely see a pullback. Again, you don't see prices going down, but you do see them slowing down as far as going up, which has to happen at some point. They can't go up 10% every 2 months. There are literally houses out there that are selling like a $1.8 million house is literally selling at $2.8 million over just a year of what it was selling for a year ago. So $1 million are basically, 30 or 40%. When your average price is $1.5 million to $2 million and the market goes up by 1/3, then it's going up $500 to $1 million over the last year. Now, you do see San Ramon at 111%. But, the one comment I have on that is the fact that you have a situation where there was one home in San Ramon that it was obviously underpriced. And it was listed at $1,495,000, I think, got 46 offers. 46 offers and sold for $500,000 over asking. So if you take that one sale out of these stats, San Ramon would probably be about 106, 107% also. So you do see some drawback as far as appreciation, but the market's still as strong as it ever was. So if you have any questions on your house, every individual situation is a little bit different. We have some homes that, I'll tell you what we're basically seeing overall. We're basically seeing 1 or 2 homes still selling for asking price, or maybe even a little bit over asking, but 1 or 2 offers instead of 5 or 10. If you have any individual questions on your home at all, because every neighborhood and even every home within a neighborhood is a little bit different. If you just want some advice or get a feel for the market, no obligation, of course, reach out, give me a call. Again, Joe Kehrig. I'm the managing broker of Coldwell Banker Real Estate in Danville. Cell number 925-487-6838 and joe.kehrig@cbrealty.com if you want to drop me an email. Have a great week, and we'll talk to you in a couple of weeks. And as always, may God bless you, and may God bless your family, and may God bless the United States of America. We'll see you soon.